Good afternoon, everyone. It's Ali, Coram, and Ed Carson with a breakdown of the action for Friday, January 12th. And Ed, week 2 of 2024 was a pretty good one.
Yeah, and it made week 1 look a lot better in hindsight. I want to take a look at 3 stocks that are in buy zones right now: Microsoft, MercadoLibre, and Novo Nordisk.
Let's do it. But first, let's take a look at the major indexes. So to cap off the week, Friday's action, pretty mild. The NASDAQ up fractionally. Same for the S&P 500, which was up almost 0.1%. On the downside, the Dow and the Russell down 0.2% each. But even though we had a pause at the end of the week, it was a strong start and a lot of strong action underneath the surface.
Yeah, absolutely. So the market came down in the first week of the 2024, and then the NASDAQ and a lot of stocks, it found support around the 10-week line. It was sort of just above the top of its prior range as well. So a lot of stocks did this. They sort of came down and then rebounded. So it rebounded right where you would expect it to, hope it would. And so we did that on the upside, and all these indexes sort of did this. They all hit resistance late in the week around key levels. The NASDAQ paused around the 15,000 level, and the S&P actually got above briefly not short-term highs, which is almost a 2-year high, and almost got to record highs. So it's a natural place to pause, but obviously strong gain as well. Dow, not so much of a big gain, but keep in mind, Boeing was a huge drag on this index. The fact that this kept on hitting new highs during the week, it hit new highs on Thursday and Friday before backing off. And United Health was weak, and so there was weakness in there, but still strong performance here. Again, just a lot of action, as you say, a lot of leading stocks, flash buy signals are setting up, really, really positive action. Just provided the beginning sort of the rally looks in really good shape in my view.
Yeah, I agree, Ed. And it seems like the only area that we'd like to see get a bit better at this point are the small caps. So here's a look at the Russell 2000. I'll look at the weekly chart here. This week wasn't really a terrible week. It closed flat on the week, although it raced a gain. But we're seeing a little bit more of a pronounced pullback here for the Russell versus some of those other major indexes, falling back into this sideways range below that 2000 level that we're keeping an eye on. So it would be great, speaking of market breadth, this would be one area that we would want to see some improvement. But even still, Ed, it's not a narrow rally at this point, or, the stocks are looking good. It's not just a small handful of them.
Yeah, so while the market breadth, as you say, like that's probably the biggest weakness. RSP looks a little better, which is the equal weight, but that's holding above the prior highs and finding support of the 21-day line. So it didn't really do a whole lot, but that's fine. It's holding up. But to your point about market leadership, if we look at QQEW, I like to use that as sort of a rough proxy because these are big names, okay, and it's mostly tech, but that one didn't do as well as the NASDAQ 100, but it was still up over 2% for the week. Nice bounce there. So that's of the market leadership. So the breadth, a little disappointing to start 2024, but leadership has sort of had some breadth and some depth to it.
Yeah, exactly. Okay, let's take a look at a couple of more ETFs here. Let's see. IGV, software sector. How did that fare this week? We had CES in Vegas, and artificial intelligence, of course, was the big buzzy theme there. And IGV, which tracks the software sector, up 5.7% for the weekend.
Boy, it just seemed like there were dozens of software stocks that were bouncing off their 10-week lines this week. Microsoft was one of them and a big component in this, and we'll get to that later. But so yeah, it looked really good, reasserting a lot of leadership here at the software group.
Yeah, and as you mentioned earlier, it seems like there's a lot going right in this market rally. We had 2 months of strong action, 1 week really of a pullback to start off the year, but right to a key level for many of the indexes and many of the stocks underneath the surface, which is what we want, right? I mean, if you have the kind of rally where it's hard to even have add-on entries, then how do you participate, right? So having this pullback and bounce right on cue almost,
Yeah.
it's it enables us to put a little bit more money to work if we hadn't gotten quite fully invested by the time things were starting to look extended into year end.
Yeah, I mean, I think we're in a better shape than we would have been if we kept rallying a little bit into this year. I mean, so yeah, really, really nice to see.
Okay. Two more quick ETFs to check in on. Here's a look at industrials, XLI up 0.6%, and XLF, all the bank earnings now underway, holding tight here for looks like what could be as of now. I mean, it's the fifth week of tight action here, Ed, for financials. So, what are your thoughts on some of the other non-tech sector action?
Yeah, there's some industrials and some and the financials. There's some definitely some strength. There's a lot of strength emerging. There's travel stocks. There's some other names out there. So I still think there is some breadth out there. Some of them haven't really taken off, but you can see them setting up. And so definitely want to be looking at areas like XLI and XLF because there's definitely a lot of names in there that are sort of percolating.
Exactly. Okay, let's take a look at, well, you know what? Let's take a look at the 10-year yield first because we didn't go there. So, after rising last week, this week hitting a little bit of resistance at that 40-week line and backing off, Ed.
Yeah, it's interesting because this came down, the inflation numbers, they were mixed, but ultimately, if you put them all together, rate cut odds increased. Now they're looking maybe at 7 quarter point cuts for the year. The 2-year yield really fell, which is more attuned to Fed policy, and it's getting close to not being inverted anymore. It's still inverted, but it used to be like 100 basis points, and it's now getting close to like 20. So that's positive for banks and just a more it's nice to see that come down even as the 10 year is coming down. So it's a nice trend and one big reason why the market has been rallying for the last few months.
So, all that's making Econ Ed happy over there?
I'm pretty happy over here.
Sounds good. Thanks, Ed. Let's go to Microsoft, which you mentioned. We'll start with a weekly chart, up 5.6% for the week. Volume was not above average, but above the prior 3 weeks. So definitely picking up from the quiet holiday time where we saw some quiet, tight action within this base here, bouncing off of a key level. Your thoughts, Ed, on Microsoft's breakout this week?
Yeah, bounce from the 10-week, bounce from the 50-day line. There was maybe early entries on Tuesday, Wednesdays that broke a trend line and broke that sort of resistance area, came up, and it's still in range and have actually got above the buy point in the last couple of days. It took a break for several weeks. So the relative strength line took a little bit of a hit. It's coming back. This is not going to be, it's not going to have earnings that are doubling anymore, but its earnings growth has picked up and sales growth has picked up gradually for 3 straight quarters. It's definitely a leader in the AI space. So there's a lot of reasons to like this. It was a nice pattern, nice action, really, and again after a modest pullback, really showed some power this week.
hmm And with earnings coming up in just a couple of weeks here, Ed, I think it's going to be really interesting for these big tech companies that are involved in AI, just what sort of guidance they're going to be giving this year. Whereas of last year, it just seemed like companies were trying to figure out their AI strategy. And now Microsoft is here with these enterprise products for efficiency and productivity. So we'll have to see what they say about that and how that's going to be contributing on the revenue front this year.
That might be one of the very most important earnings reports because of all that, because it's in so many things: AI, cloud computing. Even if you don't care about Microsoft as a stock for yourself, it could, if they can't make money in AI, well, that's going to ripple through a lot of other companies because people might say, well, maybe we shouldn't be spending so much. So you're right. It's absolutely, it's a huge, crucial
Mhm.
company for this AI boom.
Yes, we'll have to see what happens there. Okay, let's turn our attention now to Mercado Libre, MELI. Nice day of outperformance on Friday, up 4.2%. Volume did turn out to be above average on the day here as well, Ed. So we were keeping an eye on that 1600 level. It's now getting nicely above that.
Yeah, and it briefly got above the actual official buy point of 1660, but it definitely feels actionable. It, broke some trend lines, broke, 1600 leveled, rebounded from the 10-week and the 50-day. So it was nice to see this volume today because now it sort of bookends the rally. The rebound started with some volume and now it's got
Yeah.
some volume here because there wasn't too much in between. There was like, that was one thing. Some of the rebounds we saw in stock, some of them weren't on particularly strong volume. So nice to see not a huge week, but at least there's some volume in there. Look, base on base, this one has tremendous fundamentals,
Mhm.
huge growth, triple digit growth for the last 3 quarters, accelerating revenue in the latest quarter. So a lot to like about this one. Took a nice little break, uh, but now found support where you'd like, and big move, almost 8%.
Mhm. Another one to watch. And lastly, let's check in on NVO. Both NVO and Eli Lilly having some good weeks here. NVO currently in a buy zone, Ed, also reporting in just a couple of weeks here.
Yeah, that'll be important for both of those companies for sure. Unlike unlike the market and most leading stocks, this one actually had a strong first week of the
Right.
year, and so that was nice to see. So this week it was more modest gain, and actually it's run up for several weeks now, but it's hanging out in the buy zone. Look, this is one of those transformational companies. Doesn't mean that the stock is always going to be something you want to take part of, but it's acting well. The volume has been look in the last
Yeah.
through the base, there's been a lot of volume spikes generally to the upside. So that's been positive here. Still pretty close to the 50-day, 10-week line all in all. I mean, there was probably some opportunities before. That's one reason why I chose to look at this one versus Lilly, which is looking strong too, but I think that one's more like 7 to 8% above the
Hmm.
10-week line. So I was like, okay, well, again,
Yeah.
but
8% ish versus 5%. Yeah.
But they're
To
both they
managers.
sort of vie for leadership, and neither one of them, both of them have been doing pretty well over the past year. So, they both definitely you should be paying attention to this one because these names uh, seem to be transforming the possibilities of medicine, for quite a while to come.
They sure do. All right, Ed, what should traders be doing as they prepare for another week of trade ahead? Which one note on that? We do have a stock market holiday on Monday for MLK Day. So, no trading Monday, no IBD Live or Stock Market Today video Monday. But hey, that gives traders one more day to prepare over the weekend, right?
Yeah, and obviously, look, this last week was a great example of why you wanted to have those screens ready because if you had, oh, my screens, I did them 2 or 3 weeks ago, it's like they weren't they might not have shown you what you needed to see this week. And Monday, Tuesday, Wednesday, a lot of buying opportunities right off the bat. Want to be doing that again. There's still a lot of things setting up, showing action. So you want to be doing that, taking a look at ways to be, seeing how you can maybe add exposure and go through your list. And maybe you have some stocks that didn't bounce back. So when you're thinking, well, maybe if I want to add, I'll dump this other stock. So there's just some, weed and feed kind of environment as well. But good, it's a good environment. The market is showing a lot of strength, and investors should definitely be taking part of it.
Right. And it's not like there are no concerns on the horizon. There's always a chance that something could get in the way of an optimistic outlook or even just strong technical action that we're analyzing in real time. But I think what January so far has shown is this was the first real test of this bull market and of this power trend. We did have that little pause in, late November, early December, but this was the first, I think, real test for traders. And it seems like as of now, the market has passed that test. What will next week bring? We'll have to see. But so far, so good, it seems like, Ed.
Yeah, you're right. And it's a great point about a test because it's like, how is it going to really hold up when somebody starts selling? And market did that great. So excellent point.
Great. Well, thanks, Ed. And thanks, everyone, for tuning in. That is it from us for this week. And we'll see you Tuesday morning on IBD Live, investors.com/IBD Live for all the details on that, starting at 9:20 a.m. Eastern. We'll see you there. And then we'll also see you Tuesday after the close. Have a great weekend.